If you are a financial advisor or you're someone considering hiring one, you've probably come across the idea of upfront or fee only planning. And at first, I was skeptical. Who's going to want to pay thousands of dollars upfront for like a strategic wealth plan? Wouldn't a small percentage of their assets be kind of an easier pill to swallow? But after taking a leap of faith with this model at our firm Haven, it's become totally obvious. Upfront planning fees are a massive win for both clients and advisors. And today, I'm going to break down exactly why that is and why, if you're a planner, you should implement it in your business. And if you're a client, you might want to look for a planner who charges an upfront planning fee. Okay, so first let's tackle probably the most common critiques of this, right? Isn't this a massive hurdle for clients, right? Won't they be more skeptical and more critical if they come into a relationship and immediately have to provide some large amount of money up front? Who's actually willing to pay thousands of dollars for a financial plan? Well, let's break this down. Here's the reality. An upfront fee allows clients to engage with an advisor without having to make a long-term commitment. Instead of feeling like they're making a life-altering decision or getting locked into some percentage-based fee, they can receive a one-time engagement and decide for themselves whether or not the value is worth continuing, as opposed to having to go through the decision of, wait a second, is transferring my life savings to this person or this firm the right decision over the next decade or 2 decades? They can just get their feet wet. They can try something out to see if there's enough value there to keep pursuing it. And of course, unlike AUM-based fees, which are coming under fire quite a bit lately, upfront financial planning fees don't compound with the client's assets over time. So as the client or as the investor, oftentimes these upfront fees are just a flat one-time fee. And that means there's more of the client's money or your money that stays invested, helping your wealth grow unencumbered. And so what this means is that in reality, for many people, an upfront fee, even if it's in the mid-single-digit thousands, is much less expensive than paying a 1% fee every single year on $1 million or even $500,000. With percentage fees, sure, as the assets you have invested goes up, typically an advisor's fees will come down. But the problem is that every year as the market compounds and your investments grow, you're still going to see the total dollar value of what you pay increase year over year. And the question kind of becomes, am I getting that much value in addition every single year? And none of this so far to mention that in our experience, the people who truly benefit from financial planning or wealth coaching are often the people who already understand the power of delegation. They're professionals, they're business owners. And if they're anything like most of the other successful business owners we encounter, they've fallen in love with the idea of delegation. They're comfortable and maybe even happy. They get a kick out of paying other professionals to take things off of their plate so that they can focus on more scalable activities or focus on what it is they can do best. Now, the next point I wanted to make is that when you pay for something up front and you have to physically lay out cash at the beginning, you naturally take that more seriously. You're more invested in that process. You have more buy-in. And so clients who invest in a financial plan from day one are much more engaged in the process and they're more committed, they're more bought in, and they're more likely to follow through on the specific recommendations that we come to. And this leads to better outcomes for just about everyone. Now, in our old model, if all the client really had to do was sign a couple papers and, move their funds from one institution to another, and maybe they would see a little bit come off each month for their advisor, there wasn't a whole lot of skin in the game for either party. And that led to just suboptimal results a lot of the time. And this also connects to the next point, because as a client, if you're paying thousands of dollars out of pocket for a financial plan, you're going to want to be crystal freaking clear on what it is that you're getting, right? This naturally creates a more transparent and a more structured process where the advisor has to create some sort of deliverable that feels more like maybe a product than some wishy-washy service of we'll help you here and we'll help you there and you can always pick up the phone and call us. And so to be successful in this domain, clients are going to want to know exactly what it is that they're paying for and what they expect to get out of it, which means that the advisor in the relationship has to build out an offer that does exactly that. And in the long haul, this is better for everyone because everyone gets more clear on what are we paying for and what is it that we're exactly rendering here. Now, a quick little Google search online will show you that this is a trend that's emerging. Whether it's Reddit or different forums or even ChatGPT and the AI models, if you ask them, is it time for me to hire a wealth advisor or a financial planner? A lot of the times what you're going to see is people bashing anyone who charges a commission or a fee, and you're going to have members of the marketplace recommending the person asking the question goes and see a fee-only or flat fee financial planner. These fee-only models and upfront planning fees are becoming a dominant trend. And yes, as an industry participant, that definitely feels threatening. It's definitely like, oh boy, everything's being shaken up. This way that we have always operated in may not be this way in the future. And what does that mean for our revenue? What does that mean for our business? But there might be an argument to be made that maybe you should just stop fighting it and see how you can integrate it, because I think this will become a dominant trend. The marketplace wants more clarity and objectivity and a more reasonable fee structure for them. And advisors are going to have to start shifting their business models to match that. And the ones that don't, they're at risk. By the way, if you're an advisor and want to learn how we have structured our upfront planning fee model, whether it's the pricing or systemizing the deliverable and finding great fit clients, we've built out a full guide to getting started charging upfront planning fees in the Advisor Accelerator. You can check that out in the comments below. But anyways, next I want to talk about why this is such a game changer for advisors, not just clients. We've kind of walked through all these scenarios for why it's great for a client, but let's address the advisor's biggest objections, right? How am I going to ask for money up front when I already struggle to close clients with no upfront fee, right? Or maybe the real deep down objection for more of the senior advisors, well, AUM fees are just the best because they're recurring income forever. Why would I want to give that up? My clients are happy paying that, and I do not want to give it up. But let's break this down how this might be actually a limiting belief, as great as those recurring fees seem, right? First of all, for newer advisors, one of the hardest things is simply making a living early on while you're building trust with clients and your community. You have to convince people to trust you with their life savings, but you have no experience, no social proof, and you might not even really deserve the business. And so many advisors turn in this instance to selling commission-based products just to survive, to make ends meet, which is not always in the best interest of the client. And this slowly starts to denigrate the industry's reputation for all of us. However, if I could go back to early stage me and recommend, hey, maybe you could integrate upfront planning fees, I think that early advisor would have said, you're nuts. But what I would have come back with is this allows you to generate revenue immediately without needing to manage assets. So here's some material I show newer advisors, and what this explains is that in those first few years, you have this burn rate. You have this amount of income that you need to survive. And if you stay under that too long, you go out of business. And so what a lot of people do is they have these one-time transactions, they sell commission-based products, and that gets them over the line for a little bit. And they have to then do this over and over and over until they've built a sustainable business where they spend more time over that line than under that line. And for many of us, that can take multiple years. However, if you're open to experimenting with upfront planning fees and you can create a deliverable or a product or a service that is worth several thousands of dollars in the hands of a client who needs financial planning, well, then you can immediately overcome this problem that most new advisors struggle with. Because right from the beginning, each new client you get actually comes with some sort of upfront profitability rather than having to wait an incredibly long time, or worst of all, selling them something they don't need and burning a bridge. It took me a really long time to understand a key drawback of our industry and why it's harder for us to scale our businesses than other industries. The reason is that it takes such a long time to become profitable on a given client, since upfront cash collected is extremely low in our business. We may put a dozen or 24 hours into a client, building proposals, getting to know them, building the relationship, crafting a plan, finding the right investment mix for all these different things, right? Multiple meetings. And if our time is worth anything, it may take a year to then break even on that time input, given the size of that client. Especially if we're charging only asset-based fees where we might make a certain amount every quarter or a little bit every month. However, with upfront revenue, you can price it for profitability, and then you can take those profits immediately and reinvest them back into your business to grow way faster. Now, normally, you would have to spend 3 to 5 years building up a book of recurring revenue so that you can finally meet your subsistence needs or maybe even be comfortable. And then maybe even longer to one day have some serious profits left over. At that point, you could reinvest and scale the business, hire people, invest in marketing. But when you have upfront fees, you can be in this position from day one, allowing you to find more clients, allowing you to scale much faster, invest in better technology, hire people. Instead of spending months and months and months with the client before seeing any financial return, it's kind of self-sacrificing. And in a way, we have a responsibility to the client to stay in the business. And I think upfront fees are fantastic for that. At least it's been for us. Now, AUM-based models where we charge a percentage of assets often exclude younger and higher income clients who don't yet have substantial assets, right? These people may not meet the minimums that many wealth managers have, but they can absolutely afford a high value strategic plan because their income's high, but their assets are low. And so upfront fees let you serve this demographic profitably, which for someone like me opens up an entire world of potential. The addressable market that we can now provide something useful for goes from like 1 to 2% of the population to like 10 or 15% of the population overnight. And for me, I found that when we only charged based on assets, it became pretty easy to get complacent, right? And the relationship becomes more centered around investment performance and markets. If markets are up, clients are happy. If the markets are down, they're upset. And that's where the value exchange is. And we were charging for one thing, which was like assets and investments. And we were claiming the real value was in something else, i.e. the coaching and the planning, which they were then getting for free. Like all of this is kind of confusing. However, the flat planning fee allowed us to shift the focus back to what truly matters, which is strategy, coaching, decision-making, and implementing a plan for long-term success rather than just coming back to what did markets do? What did markets do? And that's why at Haven, we've implemented a structure where every client gets a strategic wealth plan from day one. They're actually forced to if they'd like to be a client. And we don't manage their investments or touch any other products until we've built that plan first. You'd think this would turn clients away, but it's actually had the total opposite effect, which was mind-blowing even to me. We've seen more interested, more engaged clients and better long-term relationships. So if you're an advisor considering this model, I highly recommend exploring it. But anyways, thank you so much for watching, and we'll see you in the next one.